think 2016 is going to look like a real change in the investment environment, at least in a couple of important respects. I think you're going to stop hearing a lot about global deflation fears. I think we're looking at higher inflation, although still relatively low. And I think you're also going to stop talking about interest rates, long-term interest rates, bond yields going ever lower. I think we will not necessarily see a big jump up, but we're on the long road back up relative to the last few years. I think for the next 12 months or so, we'll be sort of getting used to the idea that interest rates are going to start to rise, at least in the US, much less so in the UK and the Eurozone. And we'll also be weighing the consequences, not just of Brexit, which is so up in the air, but just as important, even for UK investors, will be what happens to the US economy, what President Trump really means for markets and for US growth. Well, I think there's a tendency for investors to see political risk as always bad and outsider figures, non-mainstream parties, as being a bad thing. Well, they're certainly a shocking thing, but if you look at what they're responding to, it's a sort of a long-standing failure to deliver from the economy for a large chunk of people. Well, that's something we should all want to fix. So I don't think we should be so scared of populism. We should start to embrace it a little bit.